I've done one of these. I've done a fair few of these, and I've done one before, Craig, where I forgot to press record and had to do it again by myself without an audience, which was not that much fun. Okay, guys, we'll just go on to the next slide. Welcome everyone today to the Partner Solution Series. It's actually been a couple of weeks or a couple of fortnights since we've had these. I regularly run these on a fortnightly basis into not only the LightYear Docs member base, but also goes out broad across social and everything. And so we've obviously got growing numbers. We've got some really good participant numbers on here today, and really looking forward to this session. I'm joined today with Craig West from Succession Plus, and I'll give you an introduction into him in a second. And we'll talk a little bit more about the relationship we're building out with Craig and Succession Plus. Some of you might have watched my webinars before might be a bit shocked in relation to that, because obviously I've talked a lot about employee share plans and ESOPs, not so much about the topic we're talking about today, but Craig and I will be over the coming weeks also running through a number of webinars and talking a lot more in relation to our solutions around employee share plans and what we're doing in that space together now. So, which is fantastic. And it's been early days, but I'm really enjoying that relationship we're building out there. And we've jumped on a couple of client calls, and they've run exceptionally well, haven't they, Craig?
Yeah, absolutely.
So, Craig West from Succession Plus, CEO, founder, been in the game for a long time, written a number of books, very well educated, especially in the succession employee share plan space. But Craig, do you want to give everyone a bit of an introduction into yourself and I guess what we're talking about today, in particular valuation tool from Succession Plus?
Yeah, great. Thanks, Michael. And hi, everyone. I think I know probably some of you, but it's good to see so many people interested in this topic. I think, we've been working in succession and exit planning now I've been doing that for 12 years. My background's as an accountant. I've done a fair bit of study, as Michael said, around capital gains tax for business sales. And then more recently, actually just submitted a doctoral thesis on using employee share plans as a succession tool.
Wow.
So a lot of the work that we do is around succession planning, exit planning, family businesses, working out what those assets are best used for. All of that always starts, and every single client we work with starts with a valuation. So I'm going to sort of go through some ideas around the valuation today and just sort of show you the tool that we've built, how it's going to work closely in with the LightYear Docs platform. And really, I'm using it not just for succession or exit, but I'm using it as a good conversation starter with clients, a good reason to sit down with clients. And you'll see when I show you how the tool works, it's all pretty simple, but part of it is to have a Q&A session with the client about the risks and operational side of their business.
Yep.
And often that leads to a stack of other issues that need to be addressed in the business. So things like an advisory board, insurances, shareholders agreements, estate planning, all of the sort of stuff, obviously looking at assets that are sitting inside or outside, self-managed super, family trusts. So I find that the valuation, whilst it's a good starting point to think about a succession plan or a retirement plan, it's also a really good starting point just to have a really strategic conversation with the client about how we can help you and what are all the areas that need to be worked on.
Yeah, 100%, Craig. And I mean, I talk about it all the time. I always start with clients, whether it's new clients or existing, and talk about what I like to think about is their journey map, which includes their risk profile and everything. And this is certainly a tool that I want to, after speaking to you, and we've been playing around with it and utilize that a lot more on a regular, at least annual basis in those discussions. So we're always looking at, okay, what's your structure? Where's your risk? How can I ensure that you can wake up every morning and not have to, so we can reduce and eliminate as much as possible, and also where you're headed. And obviously what's the value of your businesses and the value of you now, and what are your goals? And then each year we can look at that, and we can run the valuation again and say, okay, are we there? What do we have to do? What do we have to fine tune? And what are we going to do in relation to succession and everything? And I don't think enough accountants and advisors put that at the forefront. There's a lot of discussion around tax and compliance, and are we doing something right for the right tax reasons? But I always start, okay, where are you at? Where do you want to go? and what's the structure we've got in place in relation to that and protecting that. So, yeah, really looking forward to going through this today. So if anyone wants to jump in any Q&As, we'll do some Q&As at the end, but we're happy to do them throughout. If you jump in the Q&A section and just add them in there, and if you just want to chat about anything, just jump in the chat section. But the Q&A ones, we'll make sure we go through each of those questions throughout at the end. So for anyone who hasn't joined before, this is my partner solution series. As I mentioned before, we run into the LightYear databases on a fortnightly basis. There has been a little bit of a hiatus probably over the last month, purely due to the rollout of LightYear Docs 2.0, and which we'll show you a little bit as we go out through further. And we'll show you exactly where the valuation tool is going to sit in there, and just give you a little bit of insight into it. We've had our user group working through it over the last week and getting shown it. We've got our official launch on the 1st of November, next Monday. We're really excited about that. And the team's been working hard on that. So make sure you jump on and register for these. These are all about, practical partner solutions and things that I'm utilizing and that I bring to the database, and, partners that we want to work with now and going forward. So Craig, we've given a bit of introduction in there. I won't go into it too much further. You've obviously got your mug shot up there, and yeah, as you said, a lot of people know you, and I'm looking forward to working further with you. Everyone knows my background in terms of CFO and CIO roles, and obviously consultancy and the ESOP space and stuff, and I'm really looking forward to solidifying that relationship and also working closer on a lot of succession stuff. That's just showing up there. So Craig, if you want to jump through and just, I guess, talk about that. You sort of talked a little bit about this, but in terms of what Succession Plus is in your team and structure around the country. So obviously we're working closer together, and we'll talk about that at other webinars, but I've sort of working closer with you now in relation to that great team you have, and really evolving our partner solution, especially from the I Love Accounting perspective, which everyone's would be aware of it on the webinar today.
Yeah, absolutely. And I think, my background in an accounting firm, I had 4 or 5 quite substantial clients that were heading towards retirement, getting their businesses ready to sell. And I just couldn't find, tools, processes, systems to help actually implement those succession plans. Yep. In one case, it was a sale of business to a listed company. In another case, it was a big family-owned conglomerate, actually a chain of about 20 different businesses. And just handling that succession plan was quite a difficult thing because there wasn't software available. There's no valuation methodology established. There's no tools to actually implement all the things that needed to be done. So I stopped doing accounting work. I don't really miss it that much, to be honest, Michael. But, I think, like you, I've got a passion for the consulting and advisory space. I think, in my experience, clients are very happy to pay quite good money to get really good advice. Correct. Around things that are important to them. And ultimately, things like retirement, things like employee share plans to lock in their key people, things like helping them grow the value of their business, looking after their retirement in SMSF, all those things are actually pretty vital and important things to a family business owner. And they're quite happy to pay for that advice, in my experience. So I've built out we've got 20 advisors all around the country. They're in every capital city. I've got operations now in the United Kingdom and New Zealand, all using the same methodology. We've worked with about 700 and something clients over the last 12 years to help them basically maximize the value of their business and then work out how they can exit. So that's sort of the process we take everyone through. We've got a pretty defined, structured process. Most of our clients are pretty successful baby boomers, been in business for a long time, made good money, and now they're looking at sort of the next stage of that journey.
Yeah, it's quite interesting. I mean, because one of the partner solutions, which is a business, it's under one of my business partners, Eventum Optum. We've had to, we have to do a lot of valuations in relation to potential restructuring and business sales, and so and all of that work, a lot of that work we have predominantly handed out to a panel of valuers. So we're starting to look at how we can utilize this tool. So not only in the succession and specific valuation, but valuations for that purpose as well, and which is very helpful.
Yeah, absolutely. And that the tool's been designed specifically to cater for that. I know, whether it's the work that we're doing, whether it's, family law courts, CGT restructures, business assets inside self-managed super funds from an audit perspective. All those things need a business valuation. So the tool we've built complies with all the standards. We've used it many, many times for ATO valuations, etc. So yeah, we're in a pretty good spot there. It's just another tool that I think people can access and use through the platform to make it easy to help clients.
Yeah, and so you effectively can use those reports. So for court mandated, so whether it's a marriage breakdown or anything like
absolutely.
that. Absolutely. Yeah,
done that before.
Yep. Yeah, it's interesting. I was actually talking to someone in the office yesterday. It's actually an external client based in Singapore. How there's been a significant rise in divorces and marriage breakdowns during COVID, and I was saying I think it's because everyone's pre-COVID, everyone was used to spending half an hour in the morning, half an hour maybe with their partners at night, and now all of a sudden they've been in lockdown and spending 24/7. 24/7. They're like, hang on, I've never signed up for this gig, and the rate's been increasing, which is, it's sad in itself, but it's just shows you what all the mental struggle everyone's been has been putting up with too through the whole thing.
Absolutely.
So business valuation tool, say goodbye to expensive and inefficient valuation providers. It's certainly expensive from my point of view in relation to what we've had to experience in the past. Anywhere $3,500, $5,000, $10,000, and the other big thing we've experienced, Craig, is and even more recently is. When we speak to the external valuers, they're like, "Oh, I don't want to do that. I don't. Is this likely to go to court?
Exactly.
Am I going to have to be an independent witness?" And they'd go through all the specific purposes of it, and all of a sudden, no, I don't want to do that sort of type of valuation. And it's actually got harder and harder to actually find people specifically in the valuation space who actually want to put hand on heart and actually complete the valuation for you.
Yeah, absolutely. Difficult area.
It is.
But hopefully, we're making it a lot simpler by doing this.
Yep, I'll let you jump through and run.
Yeah, sure. Now, look, I think this is one of the areas, a bit like what you guys have done with the platform. This area is ripe for disruption. It's expensive, as you said. I've actually paid, when I was in an accounting firm, I paid $28,000 for a valuation for a client. Large business, complicated dispute. It was actually a partnership dispute between two business partners. It took months. It was complicated, lawyers, accountants, you name it. What I wanted to build was something that would allow an accountant to go in through your platform, log in, give access to their clients' accounts in say the Xero file, less than 20 minutes later, have a finalised valuation report that they pay, $250 for, not $28,000. And, the range, you're quite right, that you can get them for $3,000, $5,000, $10,000, whatever the numbers are. The more complicated and the larger the business, the more it's going to cost, the longer it's going to take, the more complexity. And of course, that just, really annoys your client because it doesn't need to be that complicated in 9 out of 10 cases. So what we've sort of built here is a platform where you can get the special purpose report. It's done in about 20 minutes. You give access to your client's Xero file, answer about 15 questions around operations and risk and industry and so on, and then you get the report. It's meant to be much more efficient and much cheaper. It should become then a profit center for accountants, not a cost center.
Yeah, and it's I love the link to Xero. It makes it so efficient, and obviously if you've got other reports outside Xero, you can actually put them in via CSV or enter the numbers in and stuff. But the Xero functionality is just brilliant, and it sort of puts, as you said, it changes from a cost to a profit, but it also continues to put at the forefront the need to ensure that your clients' records and financials are up to date and clean and appropriate, so that you can utilize it for tools such as this. And once the client sees that and sees the value in that they'll, further increases your value as an accountant and advisor as well in relation to what you can provide to them.
Yep.
So what are the benefits to your practice?
We probably covered most of that
we
stuff,
have.
but I think
efficiency, do it yourself is great. So API, we've sort of covered this in relation to Xero and everything. Obviously, this slide pack will go out to everyone, but we're sort of jumping.
There's actually a couple of questions popping up about whether the valuation tool can talk to MyOb and QuickBooks. As of today, no, but we're actually just testing now an API with MyOb. We've also got an API with QuickBooks. We're also looking at being able to bring in financial statements from other applications, for things like Handy Ledger or whatever you use to do your financial statements. Although what I'm finding is most people are just doing all of that work now in Xero. And so if your Xero file's up to speed and up to date, you'll see it works pretty quickly and easily after that.
It's actually good, isn't it, Craig? Because when it comes through to Xero, there's actually an area section where you can actually do add backs and stuff if you want to put
do all the adjustments,
all those adjustments and everything. So I'll just jump out of that and I'll just show you the live demo video. This is the best way sort of to show it through, and then we'll take some questions, answers on it.
I'm now sharing my screen. I just want to take you through and show you a live demonstration of the valuation tool. I've got three options here that you can see. One is a pay-as-you-go option where I just pay for the report each time I use it. The middle one is a foundation plan, which is $360 a month, and that will run 3 reports per month. And the professional plan on the right-hand side is $900 plus GST per month, and it's an unlimited number of reports. So for today's demonstration, I'm just going to click and select the one-off report, continue with that. It will then take me in to the tool, and I'll then need to actually go into Xero and log in. Now this, if I'm an accountant logging in, I will see all of the entities on the screen that I've had valuations done before. You can see the columns there, entity name, industry, and the last valuation date and details. Up the top right, you can see I've got a balance of 1 report because I'm just doing the reports one-off. Now I'm going to add an entity from Xero. So I've clicked on that button to add from Xero. I now need to log into Xero, which I'm going to do quickly. And it'll then ask me as my login. Of course, it needs an authenticator code, which I'll do now from my phone while we wait. Sorry about that.
Those great authenticator codes. Mate, I changed phone to the new iPhone recently, and I forgot to switch them across.
Xero. It's now going to go into my Xero files and allow me to select which organisation I wish to do a valuation on. So I'm going to drop down to a dummy organisation we use for training called Smith Engineering, and I'm going to allow Xero to access that file. It'll access the file and then go in and retrieve the financial data that we need to populate the valuation tool. So while it's looking up Xero access code, it'll allow me to go in. It'll allow the tool to talk directly to Xero and import the data. Now you can see on the screen now we've imported some data straight from Xero. I then need to tell it which particular industry are we dealing with, and in this case this is an engineering business. I type in my contact name and my email address so that we've got contact details. And I'm going to look now at which month accounts have been reconciled to. So in this case, we've got April 2021. If I hadn't done anything after, for example, the March BAS, I might select March 2021. But let's assume that's the correct date, and we're going to start a new valuation. So we're going to go into the valuation tool now, and the first thing we need to do is provide a business overview. So the first part of that is, why are we doing a valuation? And I'm going to say it's for tax purposes. This business is owned by 3 individuals. We've got a 200 square metre factory, and we've got 8 full-time employees. So now that I've entered that information, I then go into our risk assessment tool, and it's going to ask me a series of questions under each of these 5 headings. Firstly, business and ownership. I won't go through all of these, but I will show you how the tool works. So firstly, business has been in operation for a long time. All I'm doing is clicking on where I want that slider to land. I can drag and drop, or I can simply click where I want it to end up. Business has grown each year. I'm going to say our customers deal with the business, not just the owners. The business could keep going without the owners, and it's been consistently profitable. The next step then, we're going to go and have a look at our marketing and our competition. So again, we answer these questions, whether we agree or disagree. The market's not growing in this case. I'm going to say we do need to advertise. and that our website doesn't generate good business for us because we need to fix it up. It's pretty old and crappy. Next step, government regulation doesn't really have an impact on us, but I'm also going to say it's pretty unlikely we're going to get any legal action against us in this particular business. Operationally, we're going to look at some factors within the business. Plant and equipment's up to date. We don't have many bad debts. We do train our employees regularly. Cash flow is not often a problem, and so on. Where are we based? We're in a good location. We can operate here for a long time, and we sell business nationally. Now, once we've done that, you'll see then that the tool has actually already bought in from Xero our financials. Now, as I said earlier, one of the new features that we're releasing in this version is I can actually simply edit one of these fields. So if I think that that depreciation number is incorrect for some reason, or that something's not right, I can simply type over it, and it will then change the financial data that goes into the tool to make sure that I've got the correct details. Balance sheet the same, so I've got the balance sheet for the last 3 years as well. And then importantly, some of the questions that came up earlier in our session were around add backs. And I think a couple of people asked questions about excess salaries. You can see here the categories: excess staff costs, vehicles, travel, rent if we own the premises was one of the questions we had earlier. We might also have, let's say we disposed of a motor vehicle that year, so there was $50,000 in there for that. And in the most recent year, we've had a couple of years ago, we had an $80,000 court case, which is a one-off expense, hopefully never going to happen again. We also then can adjust for owner's salaries. So if we said that our owner's salary should be $120,000, that we're actually paying $120,000, but in the market, really that person should earn $150,000, then you can see at the bottom there, the tool has actually added up and adjusted for those add backs. We go to next step, and there's our valuation. Straight away pops up on the screen and tells me the goodwill value for that particular business. It's also assessed the fair market equity value and the net asset figure. Now, if we scroll down here, you can see the tool is actually currently generating a PDF report, which will come through to me. It'll also then update the entity profile, which was on that original login screen that I showed you, and actually show me the historical date that I've did this valuation, and also the profile. So if I've had a valuation done, let's say a year ago, it'll show me that a year ago the goodwill value was 600,000. Now it's 700,000 or whatever the numbers might be. I'll let that generate the report in the background, and we'll look at that in a moment. And then obviously we can see that we've got this entity profile. So the numbers come up immediately on the screen. The software then goes away and generates, as I said, a 12 to 15 page report. The report is compliant with the APS 225 standard, and it comes out in a format in PDF. Now, for the PAYG example, the one that I've just shown you quickly, there's not much ability to customize that report, but in the premium plan where you've got the ongoing unlimited subscription, you can actually add your firm or your accounting practice logo on the front page and cover of that report so that you can see your logo as part of that output. Now, it's still generating that report, which seems to be taking a while. Depends on the size of the client and the complexity involved, but we'll let that calculate away. If I go back to view entity profile, we should also be able to see then the fact that we've got the data down the bottom of the screen there that wasn't there before, that says that as of April 2021, we've got a valuation, cap multiple 320, goodwill value, etc. And then up the top here, now we've only got one valuation, but if we went and did another valuation at a different level, then you would see that the history of that would actually be tracked over a period of time. So let me just go and get that report. Again, I can go back and just check, and this is a good conversation point for clients. I can actually go back and check the answers. So if a client wants to go through, why is that valuation low? I thought an answer would be $1 million, but it's only 700. We can talk about some of these factors where we've got particularly high risk or where we had particularly poor results, which are obviously contributing to that valuation number. So again, pretty good conversation starter with clients to actually go through and have a look at why we got that particular result. Now, I'm not sure why that's still generating the report. We might just let that do its thing for a moment. There we go. Now got a download report option, and we can actually see the PDF report now has downloaded onto my laptop. I can open that up. I can email it to my client, print it out, do whatever I need to do with it. So hopefully, as you can see, it's a fairly simple process. You do need to go through the questions and answers with clients. Access Xero. If you're accessing Xero, or manually enter the data, and then you'll get the valuation report at the end of the process.
Awesome. Amazing how quick that actually was, wasn't it?
Yeah, we've been doing them, Michael, anything from 10 minutes to 20 minutes, depends on two things, how big and complicated is the financial data and how quickly can you go through and answer the questions from the client. So, but yeah, look, if it takes more than 20 minutes, something's wrong. So it's a pretty quick and easy process.
Yeah, we'll jump into the Q&A that's up there, but from my perspective, just some of the things, and this might allow conversation to flow as well in relation to some of those Q&A. Obviously, as you're going through, or the advisor's going through, and I noticed on the video it talked about sitting down with your clients and going through those interpretive measures. There is a bit of interpretation in there. Is that a risk for the accountant advisor in relation to, whether they've got that right in terms of whether it's an old website or an up-to-date website? Or
yeah, look, I think there are some risk factors there, but there's some training materials that we've got as well that we'll obviously share. They'll be available on the platform, etc. So people can start to get a bit of an idea around what the parameters are. They're fairly on purpose. We've designed them so they're fairly much plain English.
They are quite straightforward, aren't they?
Yeah, absolutely.
Yeah.
And I think that's important because otherwise it just gets far too complicated and you end up making a massive mess. So and there's quite a few questions popping up here, which I'm happy to answer.
We'll run through. The other thing I think I was going to say to you, I know you mentioned about the logos and stuff, but I know we talked about when we started talking about going into a partnership and stuff that we were in relation to, white labeling stuff, and correct me if I'm wrong here, but I think the big reason that it stays under succession planning is that it's effectively signed off by you as part of that tool process and everything, isn't it?
We actually have got the capability to put other logos on the front cover, etc. But most people, like 9 out of 10 people, came back and said, no, don't do that. I don't want to do that. What I want to do is say this is an independent valuation. It's signed off by an expert. It's got PI cover and licensing and all the other registrations and so on that you need to do that. And that gives the accountant some comfort that it's, it's a third-party independent valuation. It also gives their client some comfort, that it's been done externally. It's signed off. There's a copy of the report. You can physically see it, etc.
We'll jump into this Q&A. I certainly feel a lot more comfort from my perspective. So Shane Wilson, what if we don't have access to a file? That is, we're valuing external business.
Yep, that's a good question. So there's two answers to that. Firstly, I've actually done one just recently where the client gave me access to their Xero file. It wasn't a client of mine. I don't do any accounting work. I do, all the consulting stuff. But the accounting client gave me access to their Xero file for one day. I went in, accessed the file, allowed it to go into the tool. So that's an option. But even if that's not the case, it's actually capable of just manually entering the data. Now, there's not pages and pages of financial. As you saw, it's like a summary of the P&L and a summary of the balance sheet as well. And so that's, you can actually just sit there and physically type it all in. So that can sort of work pretty well.
Yeah, Phil Scandozio, a great LightYear Docs member and user and supporter. He's put a good question there. Valuation is as good as what someone is willing to pay for that business, though. There's always a market value for something, isn't there? So
yeah, absolutely. But I think it's a good point, though, Philip. But I think the point is to have a conversation with the client around, well, the tool's telling me your business is worth 700,000. If you want to sell it for $1 million to retire, here's the things you can do. Because I actually don't think it's just about what someone's willing to pay. I think you can change the valuation of your business. You can actually go in and say, okay, I've got a really bad score for marketing. I've got a really bad score for compliance and governance. Let's go and fix those things up. Let's get, for example, let's put my accountant on the board of advisors for the next 6 months to clean up the corporate governance, get some reporting structure. Then my risk goes down and therefore the valuation goes up. So I think you're right, Philip. I mean, someone's got to buy it, but I think you can identify with this tool the things that are going to detract from the value and work with your client to help them improve it.
Yeah, 100%. Yeah, and that's a good thing, isn't it? You can actually play around with those slides and say, look, if we do focus and concentrate on these areas where you might have had lower positioning, then what would the outcome be? And set about working upon those.
I've actually just done that with a client where about 6 months ago I did their valuation. They were pretty disappointed with it. I showed them the 4 or 5 key factors that were really dragging them down. They've gone away and worked on that actually with a business coach. Their accountants actually had monthly board meetings with them, cleaned up their governance, got their reporting, their profits improved slightly as well. We've now gone back, their valuation's gone up $500,000, happy days. And they're quite happy to pay me, the accountant, the business coach, because you can tangibly see that there's a $500,000 improvement.
Wow. Yeah, that's incredible, isn't it? Yeah. So Shane Buckley, multiples calculated based on a database of industry-specific multiples adjusted for specific risk factors. I think that's saying are the multiples.
Yeah, that's right. So yes, that is right, Shane. There is a database that sits behind the tool, both of all the valuations we've done, de-identified, and market-based data around transactions, around industry trends. We use databases like IBISWorld just to see what multiples and data is happening. But then, depending on the client's answers to all of those non-financial questions, the valuation will be adjusted accordingly.
That sort of leads into the next one, which said, is this regional or city adjusted?
It's not adjusted. When you say city adjusted, it's not adjusted at that level, but some of the answers, there was, I'm not sure you read all the questions, I went through it pretty quickly, but there were questions in there around geographical diversity. Do you just sell in your local area, or do you sell, outside that? That sort of relates to that particular topic.
Yeah.
But it won't value a business in Melbourne differently to a business in Sydney, for example. It doesn't do that. It can't do that. I don't want to get into that debate.
No, that's right. It's almost talking about the housing market across the different locations as well. Does the system work well with a trust? If the trust equity is shown in Xero at say $10 settlement sum, or do we need to?
Yeah, so there's two things there. Firstly, if it goes into Xero, it recognises that there's a settlement sum and beneficiary accounts. It'll know that it's a trust and adjust accordingly. But also, I think you saw in the video, and Michael sort of said in the intro, you can actually type over some of those figures. So if you look at it and think, okay, this balance sheet's not quite right because the beneficiaries' accounts are out of order, you can just physically edit them to get the right equation there to make it work.
Great. I always love Paul's questions. They're always
it's a good one. Yeah. You got to think about those unusual ones.
Yeah, Brad said this is a similar sort of thing. What if it's a mixed business, because you're just sort of putting valuations across multiple businesses, aren't you?
Yeah, and that's a more difficult one. I've actually done one recently where I actually separated. I basically deconsolidated the accounts for two. I've got a guy that runs a large transport business here in Sydney, but he's also got literally a large farm up in Tamworth. Completely different businesses, completely different risk profile. What I did was basically did two separate valuations. So I just separated the accounts out, did two reports, and just explained to him those two businesses are very different risks, different multiples. Therefore, that's a separate. It's difficult sometimes if they're in a similar industry. I've got another guy I did just recently, had a chain of about 15 restaurants. Well, that's all okay because they're all very similar businesses. But when they're vastly different, you can't really do that, Brad.
Phil, great question. It's the pricing isn't part of the LightYear strategist annual package. We'll show you in a second in relation to where the tool where you'll be able to access it and stuff. But and you effectively go in there. It'll open up as you start the process. If you're buying a valuation each time, then you'll pay for that through, I think it's through a Stripe or similar. Yep. And I haven't been involved in the technical aspect and between Succession Plus and LightYear and Ashley, but there's something happening there in the background, and you go through and you complete it. What's great is, which I'll show you in a second, it's all within the one custom experience for our members and everything. So how does the system deal with assets that are written off in accounts, say instant asset write-off?
Absolutely. And we've actually had that situation a few times already where people have got instant asset write-off. Again, you can manually adjust that, but there's also that table that I showed you in that demo around add backs and adjustments. One of the add backs and adjustments is asset write-off. There's also a line for loss or profit on sale of an asset. So those adjustments then basically normalize the profit to either take that asset into account or write it, if it's been written off, take it out of account. So you can just manually adjust that as you go.
Yeah, I thought that would be the case. You tend we've been having a lot of discussions in relation to ESOPs actually, but what if and clients, what if the valuation is too far from expectations?
Yep.
Great question.
Yeah, I think that's pretty common actually. I have a lot of clients where you tell them, okay, your business is worth $2.8 million and they're upset because they think it's worth $5 million. But I think it's a real good dose of reality to say, well, hang on a minute, let me explain to you why it's worth 2.8. Let's go through it. Let's look at the multiple. Let's look at the risk profile. Let's look at all those answers that you had that were pretty average or even bad, as a method to then say, well, if you want to change it, here's what you've got to go and work on. We do have clients, I think typically most business owners don't know what their business is worth. They either think it's worth nothing or they think it's worth, a lot more, $50 million and it's nowhere near that. So really it's a good reality check. I've got Don Poole, who runs a big accounting firm up in Noosa in Queensland. He's running this with every client when they come in, just as he doesn't charge them for it up front. He just says, let's sit down and just go through this. It'll take half an hour. Let's have a chat about where you're at. And then we can get a bit of a plan for the next 12 months to fix some of those areas up. He's actually generating some really good consulting work and so on out of doing it that way.
Yeah, and that's sort of exactly what you tend to say there. The expectation, isn't it? Expectation versus reality. And
absolutely.
But it doesn't mean that it doesn't lead into further conversations, further advisory work in relation to trying to close those gaps on expectations.
Absolutely.
So how do you deal with a group scenario? This is a bit similar before in relation to, I guess, deconsolidating. And the group scenario probably, it really depends in, I guess, if it needs to be deconsolidated or not, because if it's in the same business, it could be effectively just a set of group consolidated accounts.
Yeah.
But yeah, so I mean, if it's all different business streams, then obviously you'd go down and actually break it down into each division and department and.
Exactly right.
Can you enter the data via an Excel file?
Yep, absolutely. Yep, you can import an Excel file the same way we imported a Xero file. So yeah, if you wanted to export it from some other package, yeah, absolutely.
When you say that they're deficient in areas, are you referring to the answers that were provided, or these are identified in the report?
Both. So yeah, both. So the answers that were provided, you can always scroll back and go and have a look at them. So if you've noticed that in each of those, they're grouped under those various headings. If your client's got, 8 questions and all of them are don't agree, bad, poor answers coming through, then obviously that's a focus area to say there's an issue here. And I think that, that's an important point to just have the conversation with clients to understand what actually drives their valuation. It's not just the profit number. Profit number is important and you've got to have it. And they will understand that part, I think, but a lot of clients don't understand the impact the non-financial stuff has on the outcome.
And some of that might involve asking some of the hard questions, mightn't it? I mean, if I jump on the website example, there'll be a lot of people think they have a great website, but if you start breaking it down and go, well, what do you actually achieve? What you're trying to achieve out of that website? Do you get leads from it? Do you?
Absolutely.
So, what can we do in relation to that?
Yeah, absolutely.
John, are the various factors weighted?
Yep.
And if so, yep.
Good question. So yes, they are weighted. The algorithm weights them in the background, but you would have also, or maybe you would have noticed, John, there's a couple of key questions around things like owner dependence, for example. It's actually asked 2 different ways in the same section. A, because it's a critical factor and therefore it's more heavily weighted, but B, sometimes sort of we want to make sure we're getting the right answer out of business owners. We don't want them to sort of try and game the system and just tell us what we think we want to hear. So yeah, there is a weighting that sits in the algorithm underneath it. And that's based on the answers that clients come up with.
Different methods have different dollar results on the output page. How do we know which results we should be using?
Yeah, okay. So the methodology is explained in the report, and the actual valuation summary paragraph will tell you the business is worth X, $3 million based on discounted cash flow, based on maintainable earnings sort of multiple. So the result will actually be highlighted for you. We saw on the screen when it was generated, firstly, there's a couple of numbers there: goodwill multiple, the actual multiple itself, net tangible assets. So in other words, the balance sheet sort of valuation model, but the summary on the report will actually tell you which methodology is the one we've used.
So John, again, do you propose to provide a reverse engineered valuation? So if I'm sitting with a client and I select the high value factors and move the slide to show the what if results, yeah, you can certainly do that and go through, okay, if we did work on these areas and change it, this is what the likely
result. The outcome. Yeah, absolutely.
And that's a good process to go through.
Yeah, absolutely.
Did you say the report generated? Yes, compliant? Correct?
Yes, absolutely. APS 225 is compliant, absolutely. And it says that specifically in the report that's generated.
Do you have the ability to review the report and adjust the input figures? Yes, you do. Correct. You can actually go back and adjust those any of those add backs and legals and things like that. Yep. Do you have an example of the report produced? Yeah, we can.
I think you mentioned before you're going to send out the slides. I think we might send that Smith Engine. I've got that report that we just generated, Smith Engineering. Yep. We'll send that out with the slides so everyone can have a good look at it and see what's
100%. We'll send that out, the slide pack, that report, and obviously the recording by the end of the day. Other questions available as PDF checklists, which we can send to clients?
No, but that's a really good idea, and I'll make a note and get it done.
Yeah, it is a great idea.
It's not available at the moment, but I can't see why we can't do that. It wouldn't be that difficult to turn it into a checklist.
Yeah, it's something we can probably create too from our end, Craig, because we're doing a lot of stuff, especially in the estate planning and area in which we're sending out client-directed interviews, so that we'll send it out and they'll actually complete it, and it's effectively like a data collection, and they'll be able to send it and put, okay, these are my assets, liabilities, these are my risk areas and everything, and across, we'll roll that out with more and more documents, but actually help in relation to that data collection process. So
perfect.
Re-tax, we always have a number.
I think that's related to the next question.
Yep. Say 6 million limit.
So if you're suggesting we can adjust the valuation and make it end up at 5.8, no. But if your answers come out at that, you'll get the valuation report that says that. I think it's a good review to have a look at it and just see, you know, at an initial review, are we anywhere near that number, or are we way away from it? You know, if you run the report and it comes out and says this business is worth 10 million, there's no way you're going to get it to 6. If it comes out and says it's 5.95, then obviously you'll be okay. And, you know, there is the ability in the system to save the report and review it. So you can go back and look at the add backs, drill down with the client into some of the more, you know, personal expenses, salaries, rent paid on their building that they own in their super fund, all those sorts of things to adjust the outcome. Absolutely.
Yep. John, how do you deal with valuing IP? That's a great question. I mean,
yeah, that's a really good question. There are two ways we deal with that. One is there's a series of two of the questions actually in the non-financial area actually relate to intellectual property and how well is it recorded? Do you have any special assets, intangibles, etc.? The other way is that manually in the balance sheet section, you can actually adjust that valuation. So if you've got, you know, on your balance sheet, a piece of software you develop that's at cost on the balance sheet for 500,000, but you know it's worth $5 million, you can actually go in and manually adjust that and just make that note in the report that you've adjusted the 500,000 up to 5 million in the balance sheet. Or the way that you answer the questions in the IP. I think the standard way of doing it would be to adjust the balance sheet number so it sits there as a special asset.
Do you see cases where that people might be utilising them and they might have got a valuation for the specific IP anyhow? So like I'm working with some clients who are looking in relation to going through a potential reverse takeover at the moment. We've been talking about valuing the specifically their brand on the balance sheet and bringing that onto balance sheet. And there are specific groups that value brands. Do you see that? I mean,
yeah, we've actually got a couple of... We've got a couple of people we work with that are good at valuing IP. Yes. The difficulty is, you know, our system, no matter what you put in there in terms of the questions and so on, it's based on a multiple of profit. So if you've got a startup business that hasn't traded yet, but it's got some IP that's hugely valuable, then that's going to be simply a net tangible asset value, and you've got to estimate that value. Or, as you said, Michael, you go and get someone external that's an expert in valuing tech, fintech type businesses and get it valued that way.
Will this still work with micro businesses? So I guess the SMEs and stuff.
Yeah, but typically it will. So yes, the answer is yes, it will. But what you're going to find with a micro business is most of their risk answers are going to be off the scale. You know, it's all high risk because there's no staff, there's no management, there's no redundancies, there's no systems. So they are going to get lower numbers, obviously, as a result. But that's the reality of it. But yes, it can work.
Yep. And Joe's got a good friend of mine, Joe, actually as well, great accountant, Joe Walsh, does the and supporter does the report print assumptions used in being that is how you answered the question. So does it?
It doesn't print the questions and answers. It prints the financial summary and the add backs, but it doesn't print the questions and answers. And I think 2 people have asked something around that now, so I might just make a note and see whether we can add that in.
Yeah, we've sort of answered that question in relation to that IP. I'll just check in the chat that there wasn't any questions put in there, but it looks like everyone seems to have moved. John Gowing's got, my preferred approach is to offer a valuation range based on FME and price models. Can this system generate a valuation range?
No, at the moment it generates a number. It generates a couple of different answers, so around net tangible assets, etc. It doesn't generate a range at the moment. We're basically coming out with a number. One of the reasons for that is APS 225. You can't specify a range because people were using, ranges between 1 million and 8 million to submit to the tax office, which they just won't cop. You have to put a number in there.
Yeah. There's another question just jumped. Does the system take into account or compare to industry valuations?
Yes, it does. Yep. That's why you would have seen right at the start, we had to put in the industry code. That drop-down list of, I put in engineering. That drop-down list is actually based on ANZIC code, so we can match the data properly industry to industry.
It's a guy says, I found determining profit multiple the most difficult. Yeah, same. It's often very difficult getting an EBITDA or profit multiple in particular industries, and it is a range as well. But does the report provide the source of where the multiplier came from?
It doesn't include that in the report, but under the ATO, you don't need to do that in the report. What you do need to do in the report is firstly say that it's APS 225 compliant, which we do. And secondly, you need to outline the methodology. So you don't have to say where I got the multiple from this transaction or whatever, but you do have to outline the methodology, which is included in the report.
Yeah, fantastic. They're all brilliant questions. Everyone's great for throw them out there. Just to show everyone. I mean, I'll jump up and show. There's the new LightYear logo, which officially gets launched on 1 November next week. We've got a big launch party happening up in Brisbane. I'm looking forward to leading into the next day, leading into Melbourne Cup. So it's going to be a big couple of days. But you can see, for those who haven't yet got to see it, this is effectively, you'll see on the left there, that'll be a login screen, which will obviously be you can be on your desktop, or you'll be able to log in from your phone. You'll actually be able to complete these valuations and complete company setups, SMSFs, contact our live support. You'll be able to, you can see it up there. If I had this live right now, I could click that, and that would call into our, what we call our human support. We will, as Ashley and the team has always said, we'll always continue to deliver our support via human beings. You won't have bots or anything there. It can pop up with a video. You'll speak to, if you're speaking to our team leader, Geraldine, she would be up there straight away, and we'd be talking to her and conversing. You can send requests through onto here. You can have chat and everything, and all your documentation and stuff. So if I scroll down, then you'll see from up, if you can see this quick links section here, this quick link is going to have, which it does already, it'll have a link here, business valuation tool. So you'll be creating your documents or doing anything, you'll be able to click straight on that and launch straight into the business valuation tools. As similar, you'll have, and you'll see all our partner links coming out through here, trust deed stamping through EO. So now this will be a straight through process. So you create your trust deed, you'll have it here, sign, ready, bang, click trust deed stamping. That will come straight through to EO and go straight into a workflow, which will, similar to the business valuation tool, you'll pay the price in relation to doing that trust deed stamping, which is, I believe, is 220 plus including GST. And then EO will arrange to stamp those deeds for you, similar to other services such as mortgage registrations, caveats, and everything else. So we'll continue to build those out. And like having seen this in process and used, it's very, very efficient. So this is your whole brand new custom experience portal that you'll and see exactly the same thing if you want to create documents. So company, SMSF, an investment strategy, an EPOA, a will, Moat and Castle, bang, document wizard, straight away our new great amazing engine and interview process will start. And wait till you see the documents that have all been reviewed, updated, and in a much better format than what they were before. It's really exciting what's coming to market. So I love that new portal. If anyone's got any things they want to say on that. There's a couple of more Q&A. We'll just quickly, what can we charge to do evaluation using this?
Well, look, as I said, I think in the market, if you go out there in the market, I think anything from 3 to 10,000 is really common. Occasionally larger numbers if it's complicated project, etc. But I think that certainly anything from 3 to 10 grand is really common in the marketplace. You wouldn't have any problems with that.
Yeah. When you think what you're paying for it, that's fantastic. So just coming up in our partner solution series, I talked about this recently, but we've got some funding options coming from clients, which we'll bring to the table, and really, especially given how hot the property market is, some great SMSF lending, but also some dev finance and some options around that, and first and second mortgages. Further updates in relation to asset protection restructuring, obviously with the rollout of LYD 2.0, that streamlined process, how it works. Stuff on practice management. We're also got an incubator mini series coming up where we'll do some client profiles, potential opportunities for investment. We'll bring some of your clients to the table. We'll bring some of our LightYear Docs members, and we'll also work through some of that practice management area and see what people are doing, how they can do things better and everything. So really looking forward to some of that. So Craig, thanks for your time today. That was brilliant just to have a look at the tool. I'm really excited. I'm excited to have it on and have it as a partner solution on the LightYear Docs platform. I'm excited about what we're doing going forward and what we've got coming to market. So extended offerings. So I'm working together.
Me too.
Appreciate it.
Good on you. Thanks, everyone.
We'll see you next time.